Over the last 24 years, I've invested through market crashes, recessions, pandemics, all the ups and downs you can imagine. And I've discovered something that most people have no idea about. If you don't invest into real assets, you're heading for serious pain. I'm talking about working until your late 60s or even 70s, struggling to pay the bills, relying on a state pension that barely covers your basic needs. But here's the thing, this doesn't have to be you, because today I'm going to use everything I've learned from decades of investing to give you a simple step-by-step plan to retire early. Before we dive in, I want to be brutally honest. Back in 2010 and 2011, I lost our entire life savings gambling on individual stocks. It nearly cost me my marriage. But here's the positive side. Since 2019, after dedicating myself to proper financial education, I built 6 figures in 3 different asset classes. I'm telling you this because I want you to understand one thing. Education is everything. Chapter 1, why invest? Let's start with a question. Why should you even invest your money? The obvious answer is to grow it. You want to build wealth, so you're not trading time for money forever. But here's what most people miss. If you're not investing your money, you're losing money. But why? One word, inflation. Inflation is a silent thief that eats away at your savings every single year. Let me give you a real example. In 2007, you could buy an iPhone for about £600. Today, a comparable iPhone costs over 1,000. Look at chocolate bars. 5 years ago, they were 50p. Now they're £1.50 the size. That's serious inflation. Here in the UK, inflation has averaged around 2 to 3% annually over the past 2 decades. But we've seen spikes of over 10% recently. This means if your money isn't grown by at least that amount each year, it's losing purchasing power. This is important. And I'm very skeptical about inflation being at around 2 to 3% as reported in the media. But that's another topic for another video. So investing isn't just about making money, it's about protecting your money from silently draining away from inflation. This is why the rich invest, because they know that saving alone will never make you wealthy. Let me use a little example to really drive the point home. Over my 24 years investing, I've met hundreds of people full of regrets. Contractors in the late 50s or early 60s who've earned a fortune working overseas. I remember working in Tunisia back in 2019. A colleague who was 64 years old told me I could have easily saved £500 per month between 40 and 64, but never did. If he'd invested that £500 every month into the SP 500, averaging 10% annually, which is in line with historical averages, he would have had over £594,000 6 years ago. That's financial freedom for many people. But he didn't, and I really hope my former colleague isn't struggling in retirement. The question is, are you an investor or a saver? Chapter 2, when is the best time to invest? So when should you invest? Let's make it simple. The best time to invest was yesterday. The second best time is now, today. Here's why. Imagine 5 friends each given $2,000 every year for 20 years. One has perfect timing, one invests immediately, one spreads investments monthly, pound cost averaging, one has the worst timing possible, and the last stays in cash. Who ends up wealthier? Surprisingly, the one who invested immediately and the one who spread out investment monthly ended up almost as wealthy as the perfect timer, and far wealthier than the one who stayed in cash. This proves time in the market is less important than time in the market. Over my 24 years, I've invested through bull markets, bear markets, recessions, property slumps, and crypto crashes. And the one lesson that is really true, start as soon as you can. Stay invested as long as you can. That's how wealth is built. And if you can zoom out and think long term, this removes the stress. That's what it says in all the books I've read, and I can also tell you this from experience. Now, before we go any further, this video doesn't contain any financial advice, and the full disclaimer can be found below in the description. Chapter 3, where should you invest? Now let's talk about where to invest. Here's what I've learned after investing across 4 major asset classes. Property. Property has been a big part of my investing. From rental income to capital appreciation, it's given me steady cash flow and long-term growth, but it requires work, finding deals, managing tenants, understanding leverage, and dealing with regulations. And don't believe everything you hear about property investing. I've been in property now for 23 years, and property prices don't double every 10 years, not from my experience. Index funds, my favourite way to invest by a mile. Index funds gives you a broad exposure to hundreds of companies or thousands. For example, the S&P 500 tracks the top 500 US companies. Historically, it's returned around 10% per year on average. Warren Buffett himself says most people will be better off just buying an index fund and leaving it alone for decades. And I agree. Individual stocks. This is where it gets risky. Over the years, I've picked stocks that doubled or even tripled, but also some that lost 80%. Stock picking requires deep research and emotional discipline. For most people, index funds are safer. But if you want to pick stocks, do it with a small portion of your portfolio. To be totally honest, I lost my life savings in 2010 and 2011 gambling in the stock market, mainly because I had zero financial literacy. But since getting obsessed with investing over the last 6 years, I've earned my right to risk, as Jason Greystone would say. And I've had some big wins over the last few years with stocks like Tesla and Strategy. By the way, if you want to learn from an actual expert, look into Jason Greystone. I love his podcast, always free, and it's worth getting stuck into if you're serious about improving your finances. Crypto, the Wild West, serious risk. I started investing in crypto 8 years ago and I've seen it create millionaires and wipe out fortunes overnight. Crypto is high risk but high reward. It shouldn't be your entire strategy, but it can be an exciting part of a diversified portfolio if approached with caution. Maybe put like 5% into crypto or 10 to 15% if you're high risk like me. So where should you start? If you're new, start with index funds. They're simple, cost-effective, and proven to build wealth over decades. Chapter 4, Investing Myths. Now let's bust some common investing myths. Myth 1, I need to be rich to invest. Truth, you can start with as little as £1. The key is to start. Myth 2, investing is gambling. Truth, day trading is gambling. Long-term investing is a proven wealth-building strategy used by the world's richest people. Myth 3, I should wait until I'm debt-free. The truth is, pay off high interest debt first, but you can invest alongside paying down high interest debts. Myth 4, I need a financial advisor. The truth is, most financial advisors charge high fees, and you can really do it yourself, in my humble opinion, with a bit of education. Remember, Wall Street wants you to think investing is complex, it's hard, so you pay them fees. But the reality is simplicity wins, and that's what this channel is all about. Simple investing videos to help you build wealth. Chapter 5, Psychology over Strategy. Here's one of the biggest lessons from my 24 years of investing. Investing success is 80% psychology, 20% strategy. Look, to be honest, I'm clueless as to what the percentage is. I heard this in one of the many investing books I've read and thought it would make me sound like I know what I'm actually talking about. Anyway, anyone can learn to buy index funds or analyze a stock, but most people fail because of emotion. They panic when markets crash. They get greedy when markets boom. They buy high and sell low. But those who stay calm, stick to the plan, and keep investing win in the long run. Think about it like fitness. The workout plan matters, but consistency and mindset matter more. Investing mindset is where I can help you the most because I've had to learn about money and investing the hard way. On that note, if you see below in the description, you can get a free copy of my ebook, Learn the Hard Way, Teach the Easy Way. My English is terrible. I'm not the best writer, but I'm very confident this free book will help you as an investor. It's written from the heart and shows I do care about you and your financial future. Summary. If there's one thing I want you to take away from this video, it's this. Start investing today, no matter how small. Your future self will thank you. If you can invest consistently for 20 years, 30 years, even 10 to 15, depending on how much you invest, if you can do this, it leads to early retirement. I've told you why you should invest. I've given you examples of what to invest into. The simple plan is to educate yourself. Then invest each month for X amount of years. Then you retire early. It really is that simple. I'm not saying it's easy, I'm saying it's simple. I took investing seriously in 2019 and my results have improved massively. I built up 6 figures in 3 separate asset classes, as I've said. I have this YouTube channel. I have my school community where I help hundreds of investors with my experience. And if you want to take our relationship further, one step further, see below for free access to my community. You've probably noticed I'm trying to get you in the description and in the comments. If you've enjoyed the video and taken value from it, a comment or a like would really help me and my little channel. My long-term goal is to do YouTube full-time and help as many investors as possible. I can only do that with your help. Anyway, thanks for watching. I really appreciate it.